Indian auto sector has witnessed two major positive developments in the last few days. First, the government has proposed a GST rate cut from 28% to 18%. And second, China has recently removed restriction on rare earth metal exports to India. Now these are just short-term triggers, but the real story is long-term. India's auto sector is still underpenetrated, vehicle ownership is far below global levels. With rising income level, urbanization and exports, the growth runway is massive. And with shift towards EV, lightweighting and global outsourcing, Indian auto sector is positioned for a structural and secular growth story. Now when we talk about the Indian automobile sector, most people immediately think of Maruti, Tata Motor or Mahindra in passenger vehicle and Hero Moto, Bajaj Auto, TVS in two-wheeler, three-wheeler space. But behind every car, bike or truck that hits the road, there's a vast ecosystem of companies supplying the critical parts that makes these vehicles run. This is the auto ancillary industry, the backbone of Indian auto sector. India is one of the largest auto ancillary market in the world, supplying everything from engines, transmission, brakes and suspension to smaller but equally important parts like wiring harnesses, lights and sensors. Many of these companies are not just supplied to Indian OEMs but are also major exporters supplying parts to global auto giants. In short, if the automobile industry is the body, the ancillary industry is the nervous system and muscle that keep it moving. And because of India's cost advantage, engineering talent and rising domestic demand, this sector is poised for long-term growth. And that's what we are going to discuss in today's video, the auto ancillary landscape of India. We'll cover the key growth drivers that include both short-term and long-term opportunities. Then we'll look at the key listed companies in the entire auto ancillary landscape. Then next we will discuss which companies can benefit the most from short-term trigger of GST cut. Finally, we'll look at the key risk in the auto ancillary landscape that you should be aware of. Alright, let's get started. Friends, before we proceed with the key growth drivers, if you have not yet filed your income tax for FY24-25 and are looking for an easy solution, I would highly recommend using ClearTax, our partner in today's video. It makes the entire tax filing process very smooth, whether it's your salary, stock gains or mutual fund returns. With ClearTax, you save time, avoid errors and get peace of mind so you can focus on your job and growing your wealth. Let me quickly show you how easy the entire filing process is. Firstly, log into your ClearTax account and enter your PAN card details. This allows ClearTax to automatically pre-fill up to 95% of your information using the data from the income tax department. You can also upload Form 16 to fetch your entire salary details. Now the next part is very important for traders and investors. Under the gains from stock, mutual funds and F&O section, click on add details. Next, go to the stock and mutual fund section where you will see a list of all the major stock market brokers. Select the platform where you are invested or traded. Here you will get two easy options to report your capital gains. Option 1 is to directly import. For that, click on login and import. Sign into your broker account and let ClearTax do the rest. Option 2 is to upload your tax profit and loss report. Here, you first need to download the tax P&L report from your broker's platform. After this, just upload this report to ClearTax by clicking on Browse Files and then hit on Proceed. You can also click View Entry Details to see a breakdown or check out the dashboard to view your gains split into long-term capital gain, short-term capital gain, intraday income and F&O income. Now it's time to claim all the deductions. If you have declared your investments to your employer, then most of your data would be pre-filled here. ClearTax auto-fetches all the deduction declared in Form 16 and puts it in the right section. You can review these details and add other deduction details that may be missing. Once you are done, click on Go to Next where you will see a tax summary. Here you can see the details about your income, total tax saving, total tax liability and tax due or refund with 100% accuracy. ClearTax automatically selects the ITR form based on the income declared and the regime where you get the maximum tax refund. By the way, if you have made any losses in previous 8 years and reported them in your past income tax return, ClearTax will automatically fetch the eligible losses and set them off against your capital gains income. It will also carry forward your current year losses automatically. Once you are done reviewing all your details, you can click on the File Tax button and submit your return. Your filing will be successful. Here, most important thing is, do not forget to e-verify your tax return post submitting. So this time, no headache with ITR filing. File your ITR easily with ClearTax. For more details, you can get the link in the description. You can also use the code SBTEX to get a discount of additional 10%. Moving on, broadly we can divide the growth drivers for auto auxiliary sector in two parts. First is short-term trigger. Here the first trigger is proposed GST rate cut on auto sector from 28 to 18%. Now this is not just about making cars cheaper. It actually benefits the entire auto ecosystem because every vehicle is made up of hundreds of small parts. A GST cut makes these parts more affordable. That helps the organized player, and overall it's a big boost for the sector. Second, China has removed restriction on rare earth metal exports to India. Now why is that important? Because these metals are used in EV motors, sensors and advanced auto part. Earlier supply was a big worry, but with this restriction gone, it gives your company a more stable and predictable input cost environment, especially those gearing up for the EV wave. But beyond these near-term triggers, the real story is long-term. Think about it. India still has only about 30 cars per 1,000 people. Compare that to developed markets where it is 600, 700, sometimes even 800 cars per 1,000 people. So the runway for growth here is massive. As income rise, financing becomes easier and more people aspire to own vehicles. The demand for auto and by extension auto part is only going to go up. Then another trigger is there's a good revival in rural demand. Monsoon is also very good this year, so that would boost the demand for two-wheeler and three-wheeler. On top of that, you've got the EV transition. The parts needed for EVs are very different. You need things like drivetrain, battery casing, high-end electronics and so on. And then ancillary players are already adapting to that. And then there's the export angle. Global companies don't want to depend on China alone anymore. With the whole China Plus One strategy, India is emerging as a reliable partner for global auto supply chain. Finally, there's the aftermarket story. Every car or bike that's sold eventually needs a replacement part, whether it's brake, shocks or lights. As the number of vehicles on Indian road keeps increasing, this replacement demand just compounds year after year. So when you put together all of it, short-term triggers like GST and China easing, plus long-term drivers like under-penetration, EVs, export, aftermarket demand, you can see why auto auxiliary sector in India is shaping up as a very powerful growth story. Now let's understand the auto auxiliary landscape of India. So broadly, auto auxiliary landscape can be divided into 8 categories. First is wiring and electrical. This is the nervous system of a vehicle that include wiring harnesses, switches and EV electricals. With rising EV penetration, this segment is becoming even more critical. Now within this, there are 2 key players you should know. First is Motherson Sumi Wiring. This is India's largest wiring harness company. Super stable business, big clients like Maruti, Mahindra, Toyota, basically a clean proxy on rising auto volume. Second company is Samvardhana Motherson. This is the global parent. They are not just into wiring, they are also into mirrors, polymer parts and a bunch of other components. They also have huge global footprint. But honestly, the structure is a bit complex. So wiring and electricals may sound boring, but it is actually very critical and fast evolving space in the auto value chain. Then second category is forging, powertrain and EV components. Now this is the muscle of auto industry that include all the heavy duty stuff that powers the vehicle, like your engines, transmission, axle and now EV drivetrains. Without this, a car is just a body with no strength. There are 4 key players in this segment. First is Bharat Forge, the giant in forging. Traditionally very strong in engine and chassis part, but now also diversifying into EVs and even defense sector. Again, a solid proxy on India's manufacturing scale up. Second is Sona BLW, a new age player that makes drivetrain system and EV motors. What's exciting here is their high EV exposure. Almost 1/3 of their revenue already comes from EV. Third company is Sansera Engineering, a precision engineering company that makes forged and machine part for engines and transmission. It is also expanding into newer areas like aerospace and defense. Fourth company is Craftsman Automation, another precision engineering company that specializes in engine blocks, transmission and aluminum die casting. They are a critical supplier for OEMs. Plus, they are also into manufacturing of storage solution product for warehouses as well as various industrial and engineering segment. Now, third category is suspension and braking system. Basically, the backbone of how a car feels on the road. Here, 2 names stand out. First is Endurance Technology. They are big in suspension, braking and also aluminum die casting. In simple words, they make sure vehicle does not move but also stop safely. And with ABS and disc brake becoming standard across more segments, their role keeps expanding. Then second company is Gabriel India, also known as Shock Absorber King. If you have ever wondered why your car does not throw you off on every speed breaker in India, companies like Gabriel are the reason. They have been a trusted player in the suspension space for decades. And as road safety norms tighten, their products only get more critical. So while these companies don't always get as much limelight as flashy EV stocks, they literally decide how smooth and safe your ride feels. Now if suspension and braking are about safety and comfort, this next category is about visibility and control, the eyes and dashboard of the vehicle. Here we are talking about fourth segment, which is lighting and instrumentation. Think about it. Headlights, tail lights, indicators, they are not just accessories. They are legally mandatory and critical for road safety. That's where companies like Lumex Industry and Lumex Autotech comes into picture. They supply lighting solution to almost every major OEM in India. Then we have FIEM Industries, another big player in headlamps, tail lamps and signaling equipment, especially strong in the two-wheeler segment. But visibility is just one part. The driver also needs to know what's happening inside the car. What's the speed, fuel level, temperature, alerts and so on. All of that comes under instrument clusters and driver information system, and that's where Precall steps in, a leader in this space. And finally, you have Suprajit Engineering. Most people know them for cables, but they are also expanded into lamps and precision engineering, making them an interesting diversification bet in this segment. So this entire cluster, lighting and instrumentation, may not sound glamorous, but it's absolutely mission critical, and companies here enjoy strong OEM linkages and recurring demand. Now if you look at the auto component space, some companies don't just stick to one part of the car. They are like all-rounders. And that's where the fifth category is diversified auto components. Here Bosch India is the best example. It's not just about spark plugs or filters. Bosch is into your electronics, mobility solutions, software, and even provides aftermarket services. Basically, from engine management system to connected mobility tech, Bosch has a finger in every pie. It's like the tech brain behind a lot of vehicles on Indian roads. The next player is Minda. You can call it a proxy for the entire auto component industry because they make switches, lighting system, horns, seating, alloy wheels, sensors, telematics, EV solution, basically touching multiple parts of the vehicle. Then you have Sandhar Technology. This company may not be as big a brand name as Bosch, but it quietly supplies a wide variety of components like locks, mirrors, sheet metal parts, and plastic components. Then sixth category is aesthetics and interior. These are about design, comfort, and premium feel rather than the mechanical strength of a vehicle. It includes the trims, logos, dashboards, seat material, basically everything you touch, feel, and see inside and outside the car. With consumers willing to pay up for better looks and premium feel, this space is getting really interesting. First company in this space is SJS Enterprises. Company offers a design-to-delivery aesthetic products with more than 6,700 SKUs across 11 product categories. Second company is Varroc Engineering. They are not just into lighting, they also make polymer parts, trims and other aesthetic components. A solid global player with a wide footprint. Then third player is Mayur Unicoaters. They are leader in India's synthetic leather. If you have sat on a cushy leather feel seat in a car, there's a good chance it came from Mayur. Big supplier to both domestic and export market. Then seventh category is tires. Top player in this category include MRF, Apollo Tyre, Balkrishna Industry and Seat. And finally, eighth category is battery. In this, top players include Exide Industry and Amara Raja. With EV penetration, this space is transforming big time from traditional acid-led battery to lithium-ion batteries. At the moment, both companies are assembling lithium-ion batteries by importing the cell from China and Korea. But they are investing heavily to build domestic lithium cell manufacturing capacity. Now let's discuss which companies can be a strong beneficiary of latest GST rate cut. So the GST rate cut is aimed at boosting affordability of small cars and two-wheeler. That means companies most exposed to OEM demand in two-wheeler and entry-level passenger vehicles stand to benefit the most. Also, companies that are domestic focused would do much better than export focused company. For example, first stock is FIM Industry, which is a major supplier of lighting system to two-wheeler OEMs, has jumped a lot after the GST cut announcement. Next is Endurance Technology. Again, the share has jumped a lot and looking solid. Then third is Lumex Industry and fourth is Lumex Autotech. They are a major player in automotive lighting system, supplying to OEMs like Maruti, Tata, which again dominate the small car segment. And fourth is Uno Minda, again solid beneficiary across two-wheeler and passenger vehicle, and its stock is also looking solid. Although I would suggest that while investing in auto ancillary stock, don't just look at the short-term trigger. Try to look at the bigger picture. Maybe you can do best of both worlds and have a couple of stock from short-term trigger in your satellite portfolio and a couple for long-term. Now let us look at the final part, that is risk that you must keep in mind before investing your money. When we get excited about GST cuts, EV triggers or premiumization, it's easy to forget the other side of the story. Auto ancillary can be a big winner in an upcycle, but they also come with their own set of risk. First risk is auto demand is cyclical. At the end of the day, ancillaries are tied to auto sale. If people are not buying car or bikes, OEMs cut production and that flows straight down to supplier. We saw this in 2019 slowdown and again during COVID. Even the best companies struggled. Then second risk is raw material risk. Auto ancillary rely on raw materials like steel, aluminium, plastic, which are subject to price volatility. Rising input cost could erode profit margin, especially if companies cannot pass cost to OEMs due to competitive pressure. Then third risk is EV disruption. The world is clearly moving towards EV. And if the company is still focused on petrol-diesel vehicle, supplying engine parts, exhaust or traditional drivetrain, their margins can shrink as EVs gain share. So companies need to pivot fast. Fourth risk is global volatility risk. Global players like Bharat Forge, Balkrishna or Samvardhana Motherson are not just betting on India. They are exposed to US, Europe, China, forex swings and geopolitics. At the moment, global slowdown is hurting the growth of these companies. Then fifth risk is valuation hype. Some ancillaries, especially the EV plays, can get high valuation. As a result, even good news does not move the stock because all the optimism is already priced in. Sona BLW is a classic case. It has a very strong EV positioning, but the stock has not reacted much to GST cuts because it was already trading at rich valuation. Plus, company has high exposure to global market. In FY25, only 29% revenue was from India, 41% was from US, 24% was from Europe. And at the moment, global demand has been subdued. This has impacted company's growth in last few years and that got reflected in the share price. So to wrap it up, India's auto ancillary sector is standing at a very interesting point right now. On one hand, you've got short-term triggers like GST cuts and China easing rare earth restriction, which directly improve affordability and supply stability. On the other hand, the long-term runway looks even bigger. Rising vehicle penetration, EV adoption, global outsourcing, and aftermarket demand all points towards a secular growth story. But remember, this is not a one-way street. Demand cycles, the raw material swings, global slowdown, and valuations are real risks you cannot ignore. The smart way to approach the sector is not just chasing the hottest EV stock or jumping onto the GST headline, but looking at companies that have strong OEM linkages in India to benefit from domestic growth, global competitiveness to ride China Plus One wave, and a clear pivot towards EVs and premiumization so that they can stay relevant for the next decade. If you keep those filters in mind, auto ancillary can be one of the best way to play India's manufacturing and consumption growth over the next 10-15 years. Alright, that's it for today's video. I hope this gives you a deeper perspective on the auto ancillary space. If you find this video useful, do like, share and subscribe for more such videos. If you have any doubt, let me know in the comments. I'll see you next video. Till then, take care.